for tuning in to another episode of the COSIGN Conversations podcast. It's a special edition, Relationships with Money. I got my good homie JD Daniels with me today. We're going to be talking all things assets, cars, how to buy a car in your business name. He's going to give y'all some gems, some game, how to do that. And hopefully he'll give me enough gems and games so I can go in there and get me this Mercedes-Benz I've been talking about getting for the past 2 years. I know he's going to think I'm, full of crap, but we're going to get this going. My guy, how you doing today?
I'm well, man. How are you?
Man, I can't complain, bro. So, man, offline, we always been talking about, positioning yourself to get your business right, to buy a car in your business.
Always.
So before we get started, man, how long you been in the car game?
Man, 14 years.
Okay.
14 years. May will be 15 years.
Dang.
Yeah.
Man, yeah, so I'm sure you probably seen a lot.
I've seen a whole lot, man.
Okay. When did you start seeing, like, people buying cars in their business? That has been throughout the whole 15 years, or is this like something that's been like a trend lately with the whole, pandemic, and people are starting to be more aware of different opportunities when it comes to, finances and business?
So I've always seen it, but I think over these last couple of years, I've seen it even more. Mm-hmm. I think just with the internet and content and just people learning more about what's possible and what's available to them, especially our generation.
Yeah.
Every year, towards the end of the year, you have businesses or business owners come in and try to get their write-off. So they're trying to spend, hey, I need to spend $50,000. I need to spend X amount of dollars. So they're doing that. So we get that. We get an influx of that every year.
Okay.
So normally I'd get 3 to 5 of those deals probably in December, but now I'm seeing 2 to 4 of them a month versus just at the end of the year.
Got you. So I know you talked about write-off. So basically, if they buy a car in a business name, they can write off that full expense. I want to say it's like full expense up front, right? But I know that they might stop that soon. So you purchase a car, $50,000. That goes straight towards, expenses and write-offs, right?
Absolutely.
Man, that's crazy.
It is. And a lot of people don't know that. And a lot of people also don't know that vehicles above a certain weight, 6,000 pounds, you can write off the entire amount. So people don't know that.
So I want to say I heard that. So what are some type of Mercedes that y'all carry? A G-Wagon, right?
G-Wagon.
G-Wagon,
I think it's like 7,600 pounds, something like that. Mm. Yeah.
Are there any other Mercedes specifically that you can think of off the top of your head that's over 6,000 that people?
The GLS. GLS is the big full-size SUV. It's a 3-row. And then the GLE is another one.
Okay. So basically the SUV is over 6,000. The car is going to be a little under 6,000. Okay, so let's talk about this process, man. Okay, so I'm coming in, COSIGN Enterprises LLC, coming in.
Okay.
I want to get a car.
Right.
I don't want to be the PG though.
Okay.
So walk me through that.
So whenever you are dealing with Mercedes in particular,
okay,
they're going to want to see business history. They're going to want to see that you've been in business X amount of years before they allow you to get away with not having a guarantor.
Okay.
So
you know how many years that is? Is that 2?
A lot of times I think it's 4+.
Okay.
Now, I'm speaking about Mercedes-Benz Financial.
For
now,
sure.
when you talk about other lenders, Ally Bank, Huntington Bank, such and such, maybe even Bank of America,
right,
they'll allow you to do it at an earlier time.
Okay.
But again, it just all shows the level of you doing business, right. And sometimes they may ask for more information, but as long as you can provide that, I don't see an issue.
Okay. So what's some type of information that they need to see? I'm sure they need to see business records. Right. They need to see tax returns.
Not always.
Okay.
Not always. Again, it goes to speak to the history that you have, because if you have your articles of incorporation, obviously the forms that tie you to your business, we're gonna run an entity search that ties you to the business, that proves that you're an authorized agent to sign for it.
Okay.
Right. And again, if you have your tax ID number, you have your Duns and Bradstreet number, you have things like that show. If you have proven vendors, which is basically like a reference,
right.
They're gonna look at all of that, and they're gonna look at the situation and take it for what it is.
Okay. So you don't need the extra stuff. That's basically just like. So what about like when it comes to for Mercedes specifically, when it comes to credit? You need to be around.
No, not exactly, because it's just like about buying a car. You can be a 550 credit score and still get approved. It all just what I'm saying. It all just speaks on the type of car that you're buying, the type of equitable position. If you're putting money down, you can't roll over negative equity into a bad situation. Until you're already financing more than what you probably. Qualify for. But if anybody's a 650 and above, right. Chances are you're going to be approved. It's just the matters of the car.
Got you. So have you seen a difference in, let's say I get a car strictly my business name versus I get in my business name, but I'm the PG. Have you seen the differences in interest rates?
Not so much.
Okay.
Right now, interest rates all across the board are up. And that goes from personal or to even commercial rates, everything is up. Right now I'm seeing an average of 8-9%. And these are for even clients that have 700-800 credit scores.
Dang.
Right. And so I'm seeing a lot of that. Yeah. And so really, as long as you can back that up and you're in an equitable position, you'll see that you can get a better tier, you can get a better rate. It's not always about the score or being the guarantee. It's just more so about the position that you're in.
Got you. I've been hearing a lot about tiers. Can you explain like tiers, like what that exactly means?
Right. So for instance, again, speaking on Mercedes-Benz in particular, there's 4 tiers that they'll approve you on.
Okay.
Tier 1 is the best, right? Tier 2, obviously, that's probably mid 6s. Tier 3s, low 6s. Tier 4, probably in the 5s or below.
Gotcha.
And like I said, it all speaks on the interest rate that you'll qualify for.
Nah, that's crazy. And then the other flip side is the same thing for the process if you want to go by leasing instead of purchasing.
Absolutely.
So same.
Absolutely. And the difference is it's not an interest rate when you're leasing.
Okay.
It's what's called a money factor. And the formula is a little different. Now, you can times it. You can times it by 2,400, and it'll convert to an interest rate, and you'll see roughly what it is. It's still high, but you'll see it converts, and you can show the difference. And the difference with leasing is the dollar goes a little further. Okay. So for every $1,000 that you put down, your payment changes about $30. Versus conventional financing, it changes about $15 to $17. So that money goes further.
Okay. While we're on this, man, can you explain from your perspective? It can be your personal experience or perspective, the benefits of either one. Like, why would you buy over leasing, and why would you lease over buy?
So if you're going to lease a car, it's because you don't drive a lot of miles, right? It's because you have a basic day-to-day routine, and a lot of times it's because you want to be able to upgrade every couple of years, right? When you're ready. And even now, more so that there's been a shortage in vehicles, values have went up on cars. So even being in that lease a year, 2 years, you can trade out of that lease and have equity, right? Okay. Because you've kept low miles on it, right? Gotcha. So that gives you the option to trade every 3 years. New models come out every 7 years. Okay. So that gives you the trending cycle. Now with financing, if you are driving day to day, 50 to 100 miles, if you are, if you're not good to your car, right? If you like to ding things, right? And then over time, if you like to keep your cars, right? If you like to keep your cars, and it's because it's not always when you finance a 60 or 72 month loan, it's not easy to trade out of in the first year or two. You got to have equity, right? And statistics show that if you go 72 month loans, you're not going to pay that car down as fast as it's going to depreciate on the market. Right. I think on average, they say vehicles lose 50% in the first 3 years of their value. Some vehicles, luxury vehicles, they lose a smaller percentage versus like Dodge, Nissan, they lose a higher percentage in the first 3 years. They're losing probably closer to 60%.
Dang. That's crazy. So we're talking to entrepreneurs and business professionals, right? So we try to preach get the most bang for your buck, right? So let's say you get a car or you want to get a car in your business name. You don't drive much, but you want to keep it around for appearances, client works, etc. But then on the flip side, you're like, okay, man, I'm not driving this enough for it to make sense. So then you go back to the utilizing stuff like turo, utilizing turo, maybe even doing some ride sharing, saying on days off to make sure it pays for itself. Right. With something like that would probably be better off to buy because you're probably going to drive more, right? Or like, what would you say for somebody who wants to get it specifically for those type of services, like a turo or ride sharing?
We were just having that conversation this week. Mm-hmm. I'm seeing a huge influx of that. Yeah. So first things first, if you're going to lease, then you will sign a legal document that says that you cannot use this vehicle for producing income. And that includes turo, hire, car, ride share, et cetera.
Is that something new?
As long as I've been doing it, that's something that I've seen. Okay. Right now, we may gloss over that because we like to just sign whatever. We don't like to read terms and conditions. Right. But that's something that that's a legal document. Now that's if you're leasing. Okay. If you're financing, it's your car. You do whatever the hell you want with it. Do what you want. Right. But I've seen an influx of that, man. I'm seeing guys come in their business name and they're putting fleets of cars in and they're getting, 5, 6, even 10, 12 cars. And they're fleeting them out, hire a car, and they're keeping these vehicles going. And I had a conversation with one of them recently, and I said, what are you grossing? what are you grossing? And they said, okay, well, if I get a Toyota Camry or a Honda Accord and I put it out there on the road, I'm going to charge $400 a week. You get $400 a week back on 10 cars. That's $4,000
a week.
It's $4,000 a week. That's 16 a month and 190 something a year. You can check my math on that. You know what I'm saying? 190 a year. Like, that's gross.
Yeah.
That's a job in itself.
That's a business model in itself.
Right. So we're seeing an influx of that, and I definitely see value in that. I definitely see value in that if you can do it, if you can pull it off.
Yeah, that's what I was gonna say, man. So like when you talk about pulling it off, I've heard people go to the lot and leave with 2, 3 cars, 4 cars at one time. How is that possible? Like, how is it possible?
They met a salesman.
like are they like when you do that? Kind of talk about the financing process. Is it like, are they grouping all the cars together at one time, or are they going to different lenders? Like,
Going to different lenders.
okay, and how do you do that all at one time? Like, I mean, I've heard that like it takes 30 days for it to hit, so you could probably okay.
Right. So you come in looking for a car,
right,
and we send that deal out to 3 banks, shopping for the best rate, and they all approve you. It's a matter of a point here, a point there.
Right.
You say, okay, we have this one. Do you or anybody else need a car? Right. It is just a matter of asking that question. It's probably illegal, right? Probably. But to say, hey, okay, do you need that car? Okay, boom, we're gonna sign you up on car A. If you need another one, we'll restructure it, send in the VIN number on another one, sign you up on that one. You know what I mean? And before you know it, it's just kind of a domino effect. Now, there's some lenders out there, the stipulation of the approval will say first contract is funds first. So that means whatever contract we get first from whatever dealer, that's the one we're going to fund first.
Okay.
So if a client goes to 3 dealerships and they try that, and it goes, and multiple of those cars go to that same bank,
right,
they're going to fund the first one and they'll kick the others.
Okay.
Right.
So you got to use different.
Right. Right. I had somebody probably about a year and a half ago. He did that, came in, bought a car for me. I didn't know that he went and did something elsewhere. But we sent it to a lender, and he had no recollection of the banks that we were using. Oh, okay. And they kicked the contract because the other one was received first.
You gotta be more knowledgeable. Hey man, do not send this to Bank of America, please.
Yeah, exactly. No, exactly. It's just a matter of managing your business. And so I had to make that call, like, fam, bring the car back.
Yeah. Dang. That's crazy. Does it hinder or does it benefit you guys when somebody comes in already with their own financing? Do y'all recommend that, or do you prefer?
So in today's market, it's almost like you have to. Okay. Right. So for us, we don't like it because we want to capture the financing. Right. But you'd be a fool to refuse that business. Right. Right. Because you still get paid on the car deal. Right. So somebody's coming in with a credit union approval. They're saying, hey, I'm already approved at 3.8 or whatever. I'm not going to get in the way of that. I'm not going to get in the way of you saving money because, fam, it's about to be 7.9 over here, right? And so, if you think about that spread of points, that's probably $100 in payment, right? So why would I get in the way of you saving money? Yeah. That's not the business I'm in, right? So nowadays we're seeing a lot of people come in, credit unions, their own financing, and Navy Federal. Navy Federal yesterday was a deal I did. She walked in with a check. Yeah, so that's what happened to me when I bought my Tahoe. I had Navy Federal. And basically, I got approved through them, and they gave me the check. I had a good salesman like you. The truck was maybe 38. You know what I'm saying? My check was for 35. I was trying to finesse it. You know what I'm saying? He did what he could, but it basically came out to I think 36.5. I'm like, man, let me get the other 15, and ended up having to use my credit card for the other 15. Right. But I mean, I still walked off the lot with it. Absolutely. And got the interest rate I needed. But I kind of want to go back because there's some people, they're still building their business, still building their credit as well, so they may not have great credit. But they want to put in their business name. We talked about this offline. They want to put in their business name, but maybe somebody within their team or organization has better credit and they could put in their name, but they still using the business. Kind of walk us through the process of what that would look like if you want to use somebody who's maybe not the founder, CEO, as a PG for, your business car. Right. So let's say that a person on your team isn't the founder or the CEO or the VP. Let's say they're the director of operations, right? So if they're not legally tied as a registered agent to sign for the business, then the VP or the CEO or founder, they're going to have to provide a letter on a company letterhead that says, hey, this is John Doe, he is on behalf of me. He's authorized to sign for this purchase,
Right.
On behalf of the company, et cetera, right? And that person's going to have to provide a driver's license. We're going to have to do a background check on that person to prove they are that person, and then you have to prove that you are you. And
Like a full background check?
no. We run like a red flag.
Oh,
It's
okay,
basically
gotcha.
name, address.
Got you.
And then we just make sure that it checks out. You got to make sure you ain't no terrorist and nothing like that.
Right.
So as long as that checks out, you are the owner of that. Again, we'll do an entity search, proves that you are the person tied to that business, and that person's whatever. They got to provide a business card as well.
Got you.
Because the bank, these are things, not us. We're just the middleman.
Right.
The banks want to see that.
Does the letter on company letterhead need to be notarized?
No,
Okay.
it does not.
Okay. So just to reiterate, I could say my director of operations is allowed to make purchase under COSIGN on letterhead. I sign it, I provide it. We come to the dealership. I give her that. I give y'all that. She provides, her ID, her driver's license, and then pretty much we're good to go. Of course, you said like articles of incorporation, et cetera. And as long as it comes back that I'm KG, she who she is,
Right.
we'll be good to go.
Right. And a lot of times people may twist that for the credit purpose, but a lot of times the reason we see it is because that person that's getting it for the business is in another state, or they're out of town, or they're unavailable to come into the dealership and do everything.
Gotcha. That's
more common. However, that is the what we're talking about is a thing.
Got you. I know this might not be your department, but what are some things they look wise as far as like businesses to make sure that business is reliable for it, right? Because I know, like, let's say you are in business for 4 years, you got a couple of accounts, but you don't maybe not have like a lot of validation within your business saying that. Like, what are some other things they look for to make sure that it can go straight through them without a PG?
So again, whenever we run the entity search, we make sure that we make sure that it's an active business, right? We make sure that because it'll tell you it's public record. It'll tell you that the company's active or whatever. Or sometimes it'll tell you that it's forfeited due to not paying taxes or whatever the case may be, right? It's just basic checks and balances, right? We just make sure you are who you say you are. And like I said, and if you've been in business X amount of time, and we have the 3 or 4 lenders that provide that, then we send it to them and we let them decide.
Okay.
Nah. Yeah, I'm not gonna tell you no. I'm not gonna refuse that. I ain't stupid,
Yeah. Nah, but you said earlier you seen people get deals like at 550, and I know their interest rate is probably 18.
Well, not all like business rates right now. They don't do that. Like if you're doing it in a business, like especially in terms of like Mercedes, the highest I've seen is like 12%. Right. But if you go to somebody like a Santander who thrives on high interest rates, then maybe so.
Nah, they gonna get that. They gonna get that. What's like the most luxurious business car you seen purchased, like under somebody's business name?
Probably a G-Wagon.
G-Wagon.
Probably G-Wagons. The GLS 600, which is the Maybach.
Dang.
Towards the end of the year now, we're gonna get a lot of orders coming in. So people are gonna come in, buy the Maybachs, $250,000. They're just gonna write checks for them.
Dang.
Yeah.
That's lit. So you can even place an order for like a next year car, the same route. So same process. Nothing deviates from standard process.
Nah, if you're gonna build a vehicle, you just put $1,000 deposit on it.
Okay.
And when it comes in, I think you have like a week to come get it.
Okay. So when you do the financing, when it comes in, you sit down, do that part.
Mm-hmm. Yeah. So for instance, I'll know that a truck is coming in with that car a week in advance, and I'll say, hey, Mr. Jones, or whatever, hey, your car's coming in next week. You want to go ahead and get the approval, or go ahead and get your financing.
Right.
If you got to trade in, go ahead and give me the information. That way, when you come in, it's seamless. Because I don't like spending time with a lot of people. You know what I'm saying? Like, don't get me wrong, it's cool. Like, but I don't want to talk about your dog and all that other stuff. So come in, let's handle our business. I'm gonna give you the information, and we move on.
Does that $1,000 go towards like the principal, or is that just
either I can refund it back to you, or you can go towards the car.
Okay. Since let it go back to the car.
Yeah.
Just like,
yeah, absolutely.
Yeah. No, that's cool. So what are some misconceptions that you've seen that, that you could probably talk about before we, we switch it up about like purchasing a car or any type of assets in a business thing that you feel like you can clear up for people?
A lot of times people will call in and say, how much you want down for this car?
Yeah.
Right. And it's not about the money down.
Okay.
It's about just the whole situation. Because if you tell me I want to put down 0, cool, that's what I'm gonna work with.
Gotcha.
Now if I notice you trading in a car and you don't have any equity, you rolling over $10,000 on top of the new loan, then we're gonna have a conversation. Gotcha. It's going, hey, based on everything in this situation, this is what I think needs to happen. But you tell me, you know. And if you tell me, look, I ain't got it, I'm still gonna send it to the bank because it's not up to me. I don't make that decision. I'm gonna send it to them, let them decide. Right. You know what I'm saying? And so you may be more at risk, but people thinking that you need to put money down, that's not always a thing. People thinking that you know that you need to be there all day long. You know, you just as long as you do your research, you have your ducks in a row. You know what I'm saying? You come in, you get what you're looking for. You know, we don't. Not everybody can negotiate. Not everybody can negotiate. So if you have a price in mind, hey, say, hey, this is what I'm looking to pay. Cool. You know, again, at the end of the day, it's all a conversation. Right. It's all a conversation. You know, you're dealing with a real person. So you ask that person the questions. You know, just whatever. You know, you take care of yours, or we'll take care of ours. But on the day to day, man, you know, we deal with a lot of people that are unreasonable for whatever reason. Yeah. You know, oh, well, my car is worth this. Yeah, if you sell it outright, it might be. Yeah. But you trade it into the dealership, and we go off of wholesale value. Gotcha. Right? We go off the wholesale value, and so that says in the event that we have to sell it to the auction, then we're not gonna lose money. Gotcha. So you know, we that's the business we in.
Yeah, you gotta protect your side.
Absolutely.
Too. You know what I'm saying? I think that's I think people make the process more difficult on themselves.
Absolutely.
You know what I'm saying? For me, when I know what I want, so I go and I'm like, okay, this is what I'm looking for. This is what I'm looking to spend. Where can we meet in the middle at? You know what I'm saying? Like, I might lose a little, they might lose a little, but if we meet in the middle, it's a win-win for everybody.
Absolutely.
You know what I'm saying? So that's really it. Just go in knowing what you want, have everything lined up. I ain't gonna lie, I have been before when I was younger, like, man, I want this Eclipse. I want this Mitsubishi Eclipse. And left with a Galant.
But you know, it's like it speaks on, you know, like, again, like when we ask those questions, right? Like, all right, boom, we're gonna send this to the bank. And it's not always no. It's not always no. Okay, we may not give you 50,000. We may only want to give you 35.
Right.
So then that means we got to have a conversation about cars that are 35,000. You know what I'm saying? Like, I know there's that running joke, like people go in there looking for a Camaro, leave out with a Chevy Cruze, right? And that is the thing, you know, because sometimes people feel like, well, I'm here, I might as well get a car.
Might as well leave with something.
And I always, man, listen, I'm not twisting nobody's arm.
Right.
I'm not hiding your keys from you. I'm not doing none of that, man. We having a conversation. I'm saying, hey, man, look, this is what's going on. Yeah. This is what they're saying. This is what we can do. So you tell me what you want to do, and man, I'm gonna work for you.
Do you have is there like a formula people could look at? So for example, like you said, you know, a $35,000 car somebody might end up getting, even though they wanted 50, right? Let's say somebody with Mercedes, you know what I'm saying? With the bottom line is with a C class, you say?
Right now it's probably the A class GLA, and that's like the least expensive ones.
Okay, and that's what, like 35, you said, about 30?
Yeah, 38 to 40 grand.
38 to 40. Okay. So let's say, you know, somebody really has in mind like an E-Class, was it like 60, 60, 70? Okay, 60. Is there a formula that says if you have a business, how much revenue you need to make to be able to afford a $60,000 loan?
Not exactly. But I mean, I guess you could say that in terms of debt to income is concerned, you know, they're going to look at your mortgage amount. They're going to look how much you're bringing in monthly. You probably need to be making more than you probably need to be making enough to where whatever that payment is going to be, it's under 12%.
Okay.
12% of that. So you need to be like, all right, that's what they're going to figure that you can afford for a payment. And depending on how good your credit is, they may go up to like 15%, what they'll allow you. But let's say if you make $10,000 a month, you know, $1,200 a month, you know what I'm saying? So something like that. And so, you know, and it varies. So on a smaller scale, if you're buying a $20,000 car with bad credit, they're going to want you to finance 80% of that. 80% of that is $16,000. Okay. So that means you got to have either $4,000 down.
I get you saying.
Or you got to have a trade in, or we going to have to discount it $4,000. I can tell you right now, fam, I ain't discounting $4,000.
Yeah.
You know, so it's just, again, it's all a conversation, man.
I see. That makes sense then. That makes sense. So that's why they're like, hey, we need a down payment. You're going to be out of pocket. What else can you add to this? Okay. Dang. That's a gem right there.
Absolutely.
That's a gem right there. There's also, I don't know why, but it's also like Mercedes always comes off like as one of those cars that, like a preferred vendor, I would say, for people to buy a car in their business thing. Like, why does Mercedes have that reputation of like, we're one of the best when it comes to purchasing cars under your business?
Well, it's just luxury. It's just luxury, and it's just easy to deal with. You know, you understand
The process is easier, right?
Yeah, the process is easy. You know, it's just you know, the guaranteed retention. Like we always have clients that come back to it because leasing is so heavy. So that's why. So people are putting in their business name because they're trading every year, and they're writing off that difference. And so that's why. Just mainly because of the leasing aspect. And sometimes, you know, people just got a wife that just got expensive taste. You know what I'm saying? So
no, that's real quick. And last question before we switch gears. So this is relationships with money, right? So, you know, being in the car business for, you know, 15 years, man, you've seen a lot when it comes to financing, money, credit, good and bad, right? You know what I'm saying? For you personally, what's your relationship like been with money, like since you've been in the business, or, you know, even in general? Like, do you have a positive relationship with it? Is it negative? And how do you nurture it? Like, how do you keep, you know what I'm saying, your relationship with money?
Man, so early on, especially in the business, I struggled. I was still really young. You know, I struggled, and I was, you know, making however much a week, and I was just spending it, thinking like, oh, I get paid again next week.
I'll get it back.
You know, right? I get it back. And so then over time, as I started to make more, and then I would get paid bi-weekly, and then, you know, obviously having a child and understanding that, you know, as you grow, you want to keep things. You know what I'm saying? You want to be able to play forever, right? Yeah. And so just as you get older, it's new levels. It's just new levels to it. You know, and just the more you make, the more they take. You know, that whole saying. Yeah. You got to be able to keep it. You got to be able to put some up. You got to be able to pay yourself, and you got to be able to treat it like it's not going to be here forever.
Nah, facts.
You know, and so that's more so what it's about. You know, and anybody around me and my immediate circle to tell you I'm cheap. I'm cheap now. You know, like I'll go home before I go eat something for lunch. You know what I'm saying? I'll just go to the house and grab something. Like it's just. I just prefer it that way. I prefer it that way. I prefer being able to go buy something when I want.
Exactly. Nobody want to have to check their account every time they got to make a purchase.
Yeah.
I don't want to go back to that.
Yeah, it's just uneasy, man.
Definitely easy, man. I appreciate your time, JD, for this special edition of COSIGN Conversations Relationships with Money podcast. Y'all stay tuned for our next conversation.